Sure. Now, very good evening, everyone. How are you all? Everyone fine? Okay. Then in this live session, we'll be taking one more accounting standard for revision, that is AS 23. We'll take AS 23. Last revision class we have completed consolidated financial statement, that is AS 21. In this we'll take AS 23, accounting for investment in associate in CFS. Very easy from exam point of view. There are some question given. If you have understood that question, you will be able to attempt it. Got this point? So from exam point of view, super easy chapter. Now, what is the meaning of associate? First, we need to understand what is the meaning of associate. To associate is an entity in which the investor means the entity which are investing in a other entity, that is known as investor. So suppose A Limited has invested in B Limited. A Limited has invested in B Limited. So A Limited is what? Investor in this definition, and B Limited will become associate in this definition. Got this point? So an associate is an entity in which investor has significant influence and which is neither a subsidiary nor a joint venture. Means first, so B Limited should not be a subsidiary, B Limited should not be a joint venture. If B Limited is subsidiary or B Limited is joint venture, B Limited cannot be an associate of A Limited. Understood? Got this point? So of course subsidiary, you know when B Limited will become subsidiary. Joint venture will discuss under AS 27. Got this point? So an associate is an entity in which investor has a significant influence. Now significant influence means of course it is not control. When I am saying control, then B Limited will become subsidiary. Control already we have understood and in AS 21. So sir, how to understand that A Limited is exercising significant influence over B Limited so that B Limited will become associate of A Limited? That is the point. So what is the meaning of significant influence? Significant influence means power to participate in the financial and operating policy decision of investee. So whenever a entity has a power to participate in the financial and operating policy of that particular entity, then it means they are able to exercise significant influence. Now power to participate, just try to understand, they do not have power to govern the decision. Means when I say power to govern the decision, it means the A Limited has control. But when I am saying power to participate, means they are only participating in the meeting. They can give the suggestion, but they do not have the final decision right. Final decision right will be with whom? With the parent company. Understood? Means parent company ultimately decide about the investee, but an associate can participate, sorry, an investor who can participate in the financial and operating policy decision making, then they are known as what? Then the other entity is known as what? Associate. Understood what I am saying? So A Limited must have power to participate in the financial and operating policy decision of B Limited, then we call it A Limited can exercise significant influence over B Limited. Therefore A Limited in this example will be investor and B Limited will become associate of A Limited. Got this point? Yes sir. Now this significant influence can be gained by share ownership or by law or by any agreement. It can be by law or agreement, but from exam point of view we will concentrate on share ownership. So what AS 23 says that if an entity hold directly or indirectly, indirect relationship is always created through subsidiaries. Correct? Now so when I am saying directly or indirectly through subsidiaries, 20% or more than 20% of voting power of investee, it is presumed that entity has significant influence over other entity unless it can be clearly demonstrated that this is not the case. Means what they want to say, just try to understand everyone. A minute. So if I am saying in this way, A Limited is holding 25% of B Limited, it means it will be presumed that A limited has significant influence over B limited unless it can be clearly demonstrated that this is not the case. Means if there is some evidence that A limited is not able to exercise significant influence, then it will be considered as A limited is not having significant influence. But if there is no evidence, then it will be presumed that A limited has significant influence over B limited, and B limited will become associate of what A limited. If I say this example, A limited is holding 60% of B limited, then can I say B limited is a subsidiary because 60% will give rise to control, and B limited is having 25% of C limited. Understood? So can you say in this case B limited is able to exercise significant influence over C limited, and therefore C limited become associate of B limited. But can you say A limited through B limited, B limited is subsidiary, A limited through B limited can obtain or can exercise significant influence over C limited, therefore C limited indirectly become an associate of what? A limited also. Means C limited in this case is an associate of B limited as well as associate of what? A limited. Understood? Direct and indirect. To indirect relationship is always created through subsidiaries. Got this point? Understood this point? Yes sir, correct. Now one more point is given that in case where the entity hold directly or indirectly less than 20% of voting right, less than 20% of voting power of the investee, it is presumed that entity does not have significant influence unless such influence can be clearly demonstrated. Means if there is some evidence that even though they are holding less than 20%, they can exercise significant influence, it means in that case the investee will become an associate. But if the question is silent, always assume that in this case there is no significant influence, therefore investee cannot be a associate. Got this point? This is important from examination point of view. Correct. This much you understood. Now let us come to the accounting treatment. So accounting treatment, they have given that investor will apply equity method for accounting treatment of investment in associate in their CFS. Means just try to understand. In this case, if I am saying A limited is holding 25% of B limited, so B limited become an associate. Therefore already I have discussed that as per AS 21, even though A limited has no subsidiary and A limited has what? Joint venture and associate, A limited need to prepare what? CFS. A limited need to prepare CFS, and they need to also prepare their own financial statement, that is separate financial statement, or you can say standalone financial statement. Got this point? Yes sir. So A limited in their separate financial statement, this investment will come, investment in A limited will come, that is what? As per cost method. Cost method means what? As per AS 13. As per AS 13 means in their separate financial statement, of course accounting treatment of this investment will be as per AS 13. So we are not discussing about right now, we are not discussing about the separate financial statement of A limited. But if I am saying CFS, so if the A limited is preparing CFS, so even though A limited does not have subsidiary, they need to prepare CFS now. Correct? Understood? As per Companies Act or as per accounting standard, both. So now this investment in B limited means in associate, it is B limited, sorry, correct. This is SFS of A, this is CFS of A. So in B limited is an associate. For this we'll apply equity method. Means in their separate financial statement will apply cost method as per AS 13. So AS 13 does not require discussion because already we have covered AS 13. Got this point? So discussion required for equity method. Ki what actually equity method mean? What actually equity method mean? That we need to understand. Correct? So equity method is applied for investment associate in consolidated financial statement. In consolidated financial statement. This much you have understood. Got this point? Yes sir. Now coming to when to apply, when to commence equity method. So can you say the commencement of equity method means what? An investment is accounted for using equity method from a date when investee become an associate. Means from a date when the investee become an associate, from that date investor will apply equity method in their consolidated financial statement for accounting treatment for investment in associate. Got this point? Now how to apply equity method? To first, on acquisition of equity method, on acquisition of investment means on the date when we are applying equity method, first we need to find out goodwill or capital reserve. The formula remains same. To calculate goodwill or capital reserve. So it will be cost price of investment less, can you say, investor share of fair value of net asset of associate on the date when the investee become associate, and the difference will be either goodwill or capital reserve. Means when I am saying fair value of net asset, This is fair value of net asset. Nothing, it is nothing but by applying equity approach. Means we can say this is nothing but equity share capital plus reserve and surplus. Means entire thing remains same. How to calculate goodwill or capital reserve? The entire thing remains same. I hope you have understood this point. So first we need to calculate goodwill or capital reserve, but this goodwill or capital reserve will be only calculated, will be only identified, but will not be recognized. Means will not pass a separate journal entry for goodwill or capital reserve, because this is only calculated and disclosed. Will only disclose it, will not recognize it. So first point, what you have understood, that goodwill or capital reserve will be calculated, will be disclosed, but will not be recognized. Means will not pass any journal entry for goodwill or capital reserve. Understood? Yes sir. Means suppose if I am saying cost price of investment is 100 and the investor share in the net asset of associate is 80, so goodwill become 20. Just try to understand, when I am saying 100, so this 100 represent what? 80 and 20. Means can is the cost price of investment include goodwill? The cost price of investment include goodwill, because it is already included in the cost price of investment. Therefore, there is no need to recognize it separately. Once again, what I am saying, goodwill or capital reserve will be calculated, disclosed, but will not be recognized in the consolidated financial statement. This point have you understood? The first step is what? Calculation of goodwill or capital reserve. But goodwill or capital reserve relating to associate is included in the carrying amount of investment. Therefore, goodwill or capital reserve will not be recognized. It should be only identified and disclosed. First step you understood. Now second step is that we need to find out value of investment in associate as per equity method in CFS of investor at subsequent reporting date. So first we'll start with the cost price of investment. Correct now. Or you can also write down this as what? The fair value of net asset plus goodwill. Correct. That is nothing but cost price of investment. Correct. So this is the cost price of investment on the date when the investee become an associate. In this what we'll add? We'll add sharing profit from associate. Means the investor sharing profit from associate. So what is the share of profit that will be added? If there is a loss, that will be deducted. So I have written plus minus investor sharing profit or loss. Any dividend received from associate will be deducted. Understood? Means from exam point of view, they have not yet asked any elimination of URP, so they will not ask this. So you just right now remove this. So this will become value of investment as per equity method at each reporting date. Means what you are supposed to do, just try to understand. First take cost price of investment. In this we'll add subsequent sharing profit from associate, and then any dividend received will be deducted. It is as simple as we used to do in partnership. Correct now. Can you say sharing profit from partnership firm will be added to the investment in partnership firm in the books of partner, and whatever drawing they have done, means suppose whatever amount withdrawn is nothing but dividend, to amount withdrawn will reduce what? Investment only. Means suppose initially they have invested 100 lakh. Now in subsequent year the profit share is 20 lakh. So 20 lakh will be added, and out of 20 lakh they have withdrawn 12 lakh. So 12 lakh deducted. To any dividend received is nothing but amount withdrawn from associate, and therefore that is deducted from investment, and this will become the equity method value. Means value of investment as per equity method. Understood this fine? Correct. What will be journal entry? For purchase of investment, what is journal entry? Investment account debit to cash or bank. For recognition of goodwill or capital reserve, no journal entry. For recognition of sharing profit loss, journal entry what? Investment account debit to sharing profit from associate, and this will be transferred to PL account of investor. For if there is a loss, then journal entry is share in loss from associate account debit to investment, and this share in loss will be debited to PL account of investor. Correct? Understood. For dividend received, if dividend received, correct. For dividend received, the journal entry will be cash account, means cash or bank account debit to investment. Means it will reduce the investment. So cash or bank account debit to investment. Any dividend received, whether pre-acquisition dividend, whether post-acquisition dividend, will reduce what? The investment. So cash account debit to investment under equity method. However, AS13 in separate financial statement. AS13 as per separate financial statement, only pre-acquisition dividend is deducted from cost price of investment, and post-acquisition dividend will be transferred to PL account. So in separate financial statement we are applying AS13. But now coming to AS23, whatever dividend received will be deducted from the cost price of investment. Understood? Correct. Now I will just explain this point number 1. For eliminating of unrealized profit on unsold stock or asset due to intercompany transaction. Correct. But this is not so much important from exam point of view, because till now this point has not been asked in exam. Now I will say neither this point has been asked in CA final. Therefore, this is not so much important. But chalo theek hai. If you say that it is covered in the AS23, why not to discuss? Why not discuss? Now suppose A Limited, B Limited, and A Limited has invested 25% in B Limited. Correct. Now A Limited has sold goods costing rupees 10,000 at a profit of rupees 1,000, and the sale price become 11,000. Sale price become 11,000. Correct. Means A Limited has sold to what? B Limited. Means it is, can I say it is one type of downstream transaction where investor is selling goods to associate? Yes sir. Now the sale here, the cost price of stock become 11,000. Cost price of stock become 11,000. Now just try to understand one thing. We have understood that in CFS of A Limited, can you say stock of B Limited will not come, will not recognize any individual assets and liability of B Limited. Only what will come? Investment will come. Investment will come at equity method. Investment will come at equity method. Understood this point? And this profit and loss is coming rupees 1,000. 1,000. Now can I say this stock is nothing but a part of net asset. Just try to understand. This stock is nothing but a part of net asset. Understood? And net asset will include, is inclusive of 11,000. And this investment represent, can you say 25% of net asset? 25% of net asset. Understood? Are you able to understand? It means, can I say, in this investment 25% of unrealized profit is included. 25% of unrealized profit is included because this investment is nothing but 25% net asset, and net asset is nothing but all asset minus all liability of associate. So all asset will include stock of B Limited, and the stock is overvalued by rupees 1,000. So can you see the net asset will be overvalued by rupees 1,000? I hope you understood. And investment represent 25% of net asset. Investment represent 25% net asset. Means can you, this investment is overvalued by 25% of URP, and therefore that require elimination. So what journal entry will do? This PL will be reduced, and we reduce investment also. But 1,000 is URP of 25%, means 250 will be eliminated. 250 will be eliminated. Understood? So this is the journal entry for downstream transaction. Got this point? And therefore can I say, if you eliminate any URP for downstream transaction, that will affect investment, and therefore value of investment will reduce by 250. Value of investment reduced by 250. Got this point? Therefore when I was doing value of investment, so it was mentioned there ki elimination. If you read this now, elimination of unrealized profit for downstream transaction will be deducted, but that is also with the share of what? Means that will be with the share, means 25%, 30% proportionate share will be deducted. Got this point? Now when I am saying upstream transaction, what will be journal entry for upstream transaction? Let us say, now if I say कि B Limited has sold to A Limited. Now B Limited is an associate. Correct? Now suppose goods rupees 10,000 has been sold at a profit of rupees 1,000. Sale price become 11,000, and the stock of A Limited will be now 11,000. Correct? Now in the CFS of this A Limited, can stock is coming at 11,000? Stock is coming at 11,000. Correct? And they have earned this profit, means we need to eliminate a profit. And can I say, just try to understand, this profit earned 1,000 will be recognized by this A Limited in CFS to the extent of 25%. So they will recognize this profit because share of profit from associate will be recognized in the books of A Limited. Will pass one journal entry investment account debit to sharing profit, and that sharing profit will be transferred to what? PL account. Means already we have recognized. So can I say we have recognized to the extent of 250. So only we can eliminate from stock 250 because we have recognized only 250. Will pass one journal entry कि sharing profit will reduce by 250 to stock how much? 250. This journal entry will do. But from my point of view, this much they will not ask. If you have understood, okay. If you have not understood, you can leave it. Got this point? Yes sir. So journal entry become, you can see, for downstream transaction, retained earning means PL account of investor. So I have written PL account, which is ultimately transfer retained earning. So retained earning account debit to investment associate. Upstream transaction, sharing profit from associate, which is also transferred to PL only, means ultimately it will be transferred retained earning to inventory. Correct? Means here the net journal entries were retain earning to investment. Here the net journal entries retain earning to inventory. But with the proportionate URP, with the proportionate share of URP. Got this point? Now, cancellation of intercompany debt. Can you say because we are not recognizing individual assets or liability of associate in the CFS of parent company, therefore the question of cancellation will not arise. Therefore, any intercompany debt are there due to transaction between associate and investor, that will not be cancelled. Intercompany debt will not be cancelled. Got this point? Yes, sir. Now, there is one important point about a carrying amount investment. If suppose there is a post acquisition loss, correct? Now, suppose if I say in this way, कि 10 lakh is the cost price of investment, and subsequently there is a loss in associate and the share of loss is 11 lakh. Share of loss is 11 lakh. Understood? Correct? So batao, in this how much loss can be recognized? Only we can recognize loss to the extent of 10 lakh, because 1 lakh is 1 lakh loss. If you recognize, then investment will become negative. The investment cannot be negative in this case. So we recognize only 10 lakh. Means can I say 1 lakh loss remain unrecognized, and the value of investment will become nil. Now subsequently, suppose they again have reported profit. Suppose they have reported profit and share in profit is 2 lakh. So out of this 2 lakh, first we'll adjust the unrecognized profit of rupees 1 lakh, and then balance 1 lakh profit will be transferred to investment. Understood? This is the point. However, this is similar to minority interest, whatever we have done. Got this point? So if the entity's share of loss of an associate equal to or exceed the carrying amount of investment in the associate, the entity discontinue recognizing share of further losses and carrying amount of investment will become nil. If the associates subsequently report profit, the entity resume recognizing its share of those profit only after its share of profit equals the share of loss which was not recognized earlier. Got this one? We'll take one question based on this. This is very important from exam point of view. Correct? Then discontinue. When to discontinue the use of equity method? This can be important for theory or MCQs also. So when to discontinue the use of equity method? What our AS23 says that investors should discontinue the use of equity method from the date when it ceases to have significant influence in an associate. Means when it ceases to have significant influence, means if there is no significant influence, of course the equity method will be discontinued, but retain either in whole or in part of its investment. Means either they have retained some of the investment, then also if they ceases to have significant influence, then equity method will be discontinued, or the use of equity method is no longer appropriate because the associate operate under severe long-term restriction that significantly impair its ability to transfer the fund to investor. Sometime what happen ki if suppose there is some restriction with the associate that they will not transfer any fund to whom? They will not transfer any fund to investor. It means, can I say, even though there is significant influence, but can I say there is no economic benefit, in that case, can I say equity method will be discontinued. So from the date of discontinuing the use of equity method, investment in such associates should be accounted only as per AS13. So if you are not applying AS23, you need to apply AS13 in your both separate financial statement and consolidated financial statement. For the purpose, the carrying amount of investment at that date should be recorded as cost thereafter. Means once you have discontinued equity method, so from that what is the carrying amount of investment will be considered cost price of investment as per the AS13. Chalega. One more point is exemption from equity method. This may be also important from MCQ's question point of view ki when equity method is exempted. So what they are saying, when equity method is exempted, when either in A or B circumstances. First, the investment is acquired and held exclusively with a view to subsequent disposal in the near future. Means if you have acquired investment and there is a motive to dispose it in the near future, then even though you have significant influence, you are exempted from what? You are exempted from equity method. Means simple word, I will say these are held for sale. Means whenever investment are held for sale, then we are exempted for application of equity method. Correct? Now, associate operate under severe long-term restriction that significantly impair its ability to transfer the fund to the investor. This already I have explained. If they are operating under a long-term restriction to transfer the fund to investor, then in that case equity method are exempted. In that case also investment in such associates should be accounted as per AS13. Means this is important that when equity method is not applied, then of course we need to apply AS13 for that particular investment. Chalega. So with this AS23 is completed, you can see. Now let us come to some question. First, question number 1. A Limited acquired 45% of B Limited share on 1st April 2001. The price paid was 15 lakh. This become cost price. Following are the extract of balance of B Limited. B Limited is an associate as on 1st April 2001. Paid up equity share capital 10 lakh, securities premium 1 lakh and reserve and surplus. So again this become the net asset on the date of acquisition. So net asset is what 16 lakh is the net asset on the date of acquisition. B Limited has reported a net profit of 3 lakh and paid dividend of rupees 1 lakh for the year ended 31st March 2002. Calculate the amount at which investment in B Limited should be shown in the consolidated balance sheet of A Limited as on 31st March 2002. So means they have asked what amount to be shown in the CFS consolidated balance sheet. So first we need to find out goodwill or capital reserve in this. So what you will do, first you will do calculation of goodwill or capital reserve. Capital reserve. What you will do, cost price of investment is how much? For 45%, that is how much? 15 lakh. Then you find out fair value of net asset, 45% only. So sharing fair value to 45%, it was already we calculate net asset means by equity approach, it is 16 lakh. So 45% of 16 lakh, how much it is coming? So 16 lakh into 45%, it is coming 7 lakh 20,000. So that will be goodwill how much? Goodwill how much it is? Minus kar do 15 lakh, that is 7 lakh 80,000. 7 lakh 80,000. Understood? Correct. This point have you understood? Got this point? Simple? Yes sir. Then what they have asked, so they have already calculated 7 lakh 80,000 goodwill. Now we need to find out carrying amount of investment. To write down point number 2. Calculation of carrying amount of investment in CFS. In consolidated balance sheet as per equity method. So you can write down in this way. Ki what is the fair value of net asset? 7 lakh 20,000. Then we'll add goodwill. Goodwill is what? 7 lakh 80,000. So this is cost price of investment. Cost price of investment is 15 lakh. So we are not recognizing goodwill separately because 15 lakh is inclusive of what? Goodwill. Correct. In this we'll add sharing profit. Sharing profit. So how much profit they have earned? Batao. How much profit they have earned? They have given 3 lakh. 3 lakh ka 45%. 3 lakh ka. Achha, this is share of, you write down, this is share in fair value because this is not total. This is also 45%. Correct. So 3 lakh ka 45% how much? That is 1,35,000 will be added. And then we'll do minus dividend received. Dividend received. So how much dividend paid? Dividend paid is what? It is 1 lakh. So 1 lakh ka 45%. That is 45,000 minus kar do. So it is coming how much? 15 lakh plus 1,35,000 minus 45,000 is equal to how much? 15,90,000. This is the answer. So this is the carrying amount of investment in consolidated balance sheet as per equity method. Chalega. This become answer. This type of question can be asked in exam. Okay sir, I hope you have understood. You can see that same thing has been given. Understood? Yes sir. Now one good question, question number 2. This type of question till now not asked but can be asked. A Limited acquired 40% share in B Limited on 1st April 2001 for rupees 10 lakh. On that date, they had 1 lakh equity shares of rupees 10 each. 1 lakh equity shares of rupees 10 each means 10 lakh and accumulated profit of 2 lakh. So 10 lakh plus 2 lakh it become 12 lakh. So net asset become 12 lakh. During the year 2001-2002, B Limited suffered a loss of 10 lakh. During 2-3, they suffered a loss of 12 lakh 50,000, and during 2003, they have again a loss of rupees 5 lakh. So the extract of consolidated balance sheet of A Limited on all the 4 date recording above means, let us do one by one. So first they have given 1st April 2001. 1st April 2001 is the date of acquisition, correct? So can you say on 1st April 2001, on 1st April 2001, will calculate goodwill or capital reserve? So goodwill or capital reserve. So what is the cost price of investment? So I think they have purchased at rupees 10 lakh. How much percentage they have acquired? How much they 40%. So it is for 40%. Chalega. Then from this will deduct less share in fair value of net asset 40%. Now in the question they have given equity share capital is how much? 10 lakh, and 2 lakh is accumulated profit, means it become 12 lakh. 12 lakh ka 40% how much? That is 12 lakh into 40% is what? 4 lakh 80,000. 4 lakh 80,000. So goodwill will be how much? So goodwill will be 5 lakh 20,000. So 5 lakh 20,000 is goodwill. Understood? Correct. Now of course we don't prepare consolidated balance sheet on 1/4/2001, but they have asked what is the extract of balance sheet. So if you prepare extract of balance sheet as on 1/4/2001, suppose you are preparing, then in that case your investment in associate will be how much? But what is the share in net asset? That is 4 lakh 80,000, and because goodwill into it is closed, so we'll add goodwill. Add goodwill how much? That is 5 lakh 20,000, and total cost price become 10 lakh. Got this point? This is only disclosure purpose. This become on 1/4/2001. Now we'll come to 31st March. We'll come to 31st March 2002. Correct. So there is a loss. There is a loss. Understood? Yes, sir. So we need to find out what? The extract. We can directly prepare the extract, or you can find out first carrying amount, and then we can show what? Extract. So first find out, let us carrying amount. Understood? So in this case loss is there. What is the share of net asset? For it was already calculated 4 lakh 80,000. Add goodwill. I'm just explaining as per solution. Add goodwill is 5 lakh 20,000. So total will become 10 lakh. In this, from this will deduct less share in loss. Share in loss. What is the total loss? 10 lakh into 40%, that is 4 lakh. So what is the now carrying amount of investment? The carrying amount of investment will become 6 lakh. 6 lakh. Now how to show this in the balance sheet? Write down. If you prepare extract of CBS, extract of CBS, so what do you write down? First write down share of net asset is how much? 4 lakh 80,000. From this minus share of loss. Correct. So from this minus first less share of loss. Understood? That is what? 6 lakh. Share of loss is 4 lakh. So 4 lakh is the share of loss. Understood? So this become how much? 80,000, and in this will add goodwill. Goodwill requires separate disclosure. So goodwill is how much? It is 5,20,000. So you can see the carrying amount is coming 6 lakh only. So this will be represented in the balance sheet. Now the next part you can do by own. I have just shown for 2 year. Now just I am explaining with the solution. Chalega. So this you have understood. Now the second year loss is 12,50,000. 12,50,000. 1 second we'll do in that way. You can see they have written carrying calculation of carrying amount of investment as on 31st March 2003. So what is the opening carrying amount? 6 lakh. We can start from this only. Opening carrying amount 6 lakh. Now share of loss is what? 12 lakh 50,000 ka 40%. So 5 lakh minus and the carrying amount will be 1 lakh. Carrying amount will be 1 lakh. So how to show in the balance sheet? Investment in associate as per AS 23. So share of net asset was 4 lakh 80,000. You can share of loss, the total loss. Share of loss, so 4 lakh in the first year and 5 lakh in the second year. Total loss is 9 lakh. So it will come negative 4 lakh 20,000. And when we add goodwill 5 lakh 20,000, automatically it will come 1 lakh. Automatically it will come 1 lakh. Understood? Now third year, 1 second there is a loss of how much? 5 lakh. Now there is a loss of 5 lakh. So what we need to do? Batao. Carrying amount is coming 1 lakh. Now the share of loss is 5 lakh into 40% 2 lakh. But we can only recognize 1 lakh loss. We can't recognize 2 lakh loss because it cannot be more than, it cannot be negative value. So 1 lakh only recognize and nil, the carrying amount will become nil, and therefore in the extract of balance sheet, investment in associate will become nil. Understood is fine. So can you say how much remain unrecognized? The loss remain unrecognized 1 lakh. Now subsequently, suppose they reported profit. Let me say subsequently they reported a profit of rupees 10 lakh. So what is the share? Share is what? 40%. It means 4 lakh belong to associate, but out of this 4 lakh, first we'll adjust the loss which remained unrecognized last year. So 1 lakh will be adjusted. Only we'll transfer 3 lakh to the investment. 3 lakh to the investment means we'll add share of profit how much? 3 lakh. Understood? So this type of question can be asked in MCQs also. Got this point? Yes sir. One more question we can take. Bright Limited acquired 30% of East India Limited share for rupees 2 lakh on 1/6/2001. By such an acquisition, Bright can exercise significant influence over the East India Limited. Okay, so 2 lakh is the cost price. During the financial year ending 31st March 2001, so they have acquired on 1/6/2001. East India earned a profit of rupees 80,000 and declared a dividend of rupees 50,000 on 12th August 2001. So they have declared a dividend on 12th August 2001. East India reported earning of rupees 3 lakh for the financial year 31st March 2002. Assume profit accrue evenly and declare a dividend of 60,000 on 12th June 2002. Calculate a carrying amount of investment. Now first let me explain this question. So what they are saying, question number 3 we are doing. So they have actually given 2 year. Okay. They have actually given 2 year. The first year is ended what? It is which year? East India report 80,000 profit for which year? 31st March 2001. So this is 31st March 2001. This is 31st March 2002. So this become 1/4/2000. Correct. When they have purchased the investment was purchased on 1st June 2001. So 1st June 2001 they have purchased. 1 minute. During the financial year ended 31st March 2001, East India earned a profit of 80,000 and declared dividend of 50,000. Okay. On 12th August. Okay. So 1st June 2001 is here. 1st June 2001 is here. They acquired how much investment? 30%. And during this year they have earned a profit. The net profit was how much? 80,000. Correct. Means this was previous year. And for this year they have declared dividend. Declared dividend of 50,000 on 12th August 2001. 12th August. So 12th August is here. So 12th August they have declared a final dividend of what amount? Final dividend of what amount? 50,000. 50,000. Yes sir. Then again in current year They have earned a profit of how much they have given? They have earned a profit of 3 lakh. 3 lakh. They have earned a profit of 3 lakh. And on 12th June, means after this 12th June, the again final dividend of the previous year was declared. How much declared it was? What was the amount? It was 60,000. 60,000. This is the question. Question is thoda sa interesting. Now what they have asked? First they have asked कि what is the carrying amount investment in the separate financial statement by Bright Limited on 31st March 2002. On 31st March 2002. So can you say, if I am saying separate financial statement, means AS 13 will be applicable. So what is the cost price of investment? Cost price of investment, they have purchased investment by payment of how much? So 30% they have acquired by payment of 2 lakh. So it will be 30%, 2 lakh. Correct. And can you say from this we deduct as per AS 13 any pre-acquisition dividend? Pre-acquisition dividend. So case this 50,000 was paid, means they have received 50,000 ka 30%, that is what 15,000. 50,000 ka 30% means 15,000. So carrying amount as per AS 13 will be 2 lakh minus 15,000, that is 1 lakh 85,000. This point have you understood? Bolo. This is in separate financial statement. This is in separate financial statement. Correct. Now I'll come to what? Consolidated financial statement as on 31st March 2002. So in this, first they have not given the information on net asset on the date of acquisition, therefore we cannot calculate goodwill or capital reserve. So we'll start directly with the cost price of investment. How much? Cost price of investment how much batao? That is 2 lakh. And in this also we'll deduct what? Any dividend received. Any dividend, whether I will say pre or post, whatever dividend received, that will be deducted. So 15,000 will be deducted. And can you see, we'll also add sharing profit. So sharing profit will be added. So what is the sharing profit? Profit share is 3 lakh. This is not at all relevant. Correct. Now sharing profit is 3 lakh. Total is 3 lakh. 3 lakh ka 30% how much? That is 90,000 will be added. 90,000 will be added. So this will become how much? 2 lakh minus 15,000 plus 90,000. That is how much? 2 lakh 75,000. So this become carrying amount as per equity method, means as per AS 23 equity method. Got this point? Have you understood? I think same answer is given. Acha, one mistake we have done. Ki this was acquired on 1st June. This was acquired on 1st June. Correct now. So 3 lakh will be proportionately allocated. Correct now. So batao post acquisition profit is what? This is 1st June, means this is how many month? April, May. Means this is 2 month and this is 8 month. Sorry, this is 10 month. So proportionately it will be allocated. Sorry. Okay. So it will be what? 3 lakh. Means this will be 3 lakh into 10 by 12 into 30%. How much? 3 lakh into 10 divided by 12 into 30%. How much it is coming? 75,000. So we'll add 75,000. Then your answer is what? It is 2 lakh minus 15,000 plus 75,000. That is what? 2 lakh 60,000 will be the answer. 2 lakh 60,000 will be the answer. What is the answer given? 2 lakh 60,000. Got this point? Correct. Now they have also asked ki what will be the carrying amount on 30th June. On 30th June again they receive some dividend. So what will be general entry in CFS? So in CFS as on 30th June, Kenneth will start with this carrying amount. Carrying amount is coming 2 lakh 60,000. Again they receive dividend. So minus dividend received will do. Minus dividend received. So how much dividend declared? That was 60,000. 60,000 ka 30%. 60,000 ka 30%. It is coming 18,000. So minus 18,000. That will become 2 lakh 60 minus 18,000. That is equal to 2 lakh 42,000 is the answer. 2 lakh 42,000 will be the answer. Chalega. So you can see 2 lakh 42,000 will be the answer. Good question, can be asked in exam. One more question, question 4. In this na, thoda sa I think I am not happy with the answer. Let me do it. A Limited acquired 25% of shares in B Limited as on 31st March 2001 for rupees 3 lakh. The balance sheet of B Limited as on 31st March 2001 means they have given balance sheet of B Limited as on 31st March 2001. So this is 5 lakh equity share capital and 5 lakh reserve and surplus. So this become net asset, or you can take this net asset 10 lakh, both are same. During the year ended 31st March 2002, the following are the additional information given. A Limited received dividend from B Limited for the year ended 31st March 2001 at a rate of 40% from the reserve. Correct? Means what they want to say? That they have acquired on 31st March 2001. Correct? Means if you see the timeline, so this is 31st March 2001 and they have acquired how much investment? They have acquired 25% share for rupees 3 lakh. So they have acquired 25% for rupees 3 lakh. And this is the year ended 31st March 2002. 31st March 2002. What they are saying? During the year ended 31st March 2002, the following: A Limited received dividend from B Limited for the year ended 31st March 2001 for at 40%. 40% means यहाँ पर final dividend at a rate of 40% was declared and paid. Okay, means this is from pre-acquisition profit. Then B Limited made a profit of 7 lakh. So B Limited made a profit of rupees 7 lakh. 7 lakh is the net profit. Correct? Then what they have given? B Limited declared dividend of 50% for the year ended 31st March on 38/4, means in the next year on 38/4 they have again declared final dividend of previous year at a rate of 50%. Na? At a rate of 50% or 40%? 50%. Correct. This is the entire question. Now what they have asked? First they have asked calculate goodwill if any on acquisition. So let us first calculate goodwill. First calculate goodwill. So goodwill or capital reserve. So cost price of investment is how much? Cost price of investment is how much? 3 lakh. Less fair value means I will say this is for 25%. So you write on share in fair value of net asset. It is given 10 lakh. 10 lakh ka 25% is 2,50,000. Now from my point of view goodwill should be 50,000, but in the answer they have given nil. That is wrong. I'll explain why. We can do in this way also. We can do in this way as we do in what? AS21. Cost price of investment is 3 lakh. Can I say from this we'll deduct pre-acquisition dividend less pre-acquisition dividend as per AS13. Okay, I'm okay with this. Correct. So can I say 40%? 40% of 5 lakh means 5 lakh is the capital. 40% and into 25%. So how much dividend received? This 5 lakh ka 40% into 25% means 50,000. So we'll deduct 50,000. We'll deduct 50,000. So of course this will be about 2,50,000. But just try to understand. If you remember when we used to prepare Sona, so any dividend declared from pre-acquisition profit is also deducted from what? Pre-acquisition reserve. So what I want to say, if you have deducted 50,000 from this, so your net asset by equity approach means this will be what? Equity share capital how much? 5 lakh, and the reserve on the date of acquisition is what? 5 lakh. But can you see from this 5 lakh will also deduct what? The dividend declared. Means can you say how much they have declared? 5 lakh ka 40%. So 5 lakh ka 40% is what? 2 lakh. So that should be also deducted from this. They have not deducted this. Correct now. Are you getting what I am saying? So it is become 10 lakh or 8 lakh. 8 lakh become the net asset. After considering the dividend which is declared from pre-acquisition reserve, so your pre-acquisition reserve will be also reduced now. Correct. So now if you see, if you do in this way, so less share in fair value of net asset will be 8 lakh ka 25%. So 8 lakh into 25% is what? 2 lakh only. So answer is coming same. You can see my answer by both approaches coming same. So this is only correct. But what they have done in solution, they have taken 10 lakh ka 25%, which is not correct from my point of view. Understood? So answer should be 50,000, not nil. But if you want to follow IC solution, you can follow your choice. But I hope you understood what mistake institute has done. Got this point? Yes, sir. Now coming to next question, what they have asked: how A Limited will reflect the value of investment B Limited in CFS? To reflect the value of investment, let us do. So what we'll do? But what is the share of net asset? So I am taking my viewpoint. 2,50,000. Add goodwill is 50,000. Total become what? 3 lakh. This is the cost price of investment. In this we add share of profit. Share of profit. How much profit they have earned? It is 7 lakh. 7 lakh ka 25%. 7 lakh ka 25% how much? That is 1,75,000. So minus 1,75,000. Then minus dividend received. Dividend received, that is nothing but pre-acquisition whatever we deducted there. So that is what? 50,000. So what this is become carrying amount. So it is 3 lakh plus 1,75,000 minus 50,000 is equal to what? 4,25,000. This answer you can see will match. So 4,25,000. First they have given goodwill nil. Okay. But they are giving carrying amount 4,25,000. This answer is correct. Got this point? Have you understood? Correct. Then they have asked one more question. How should the dividend received from B Limited will be shown in CFS? So dividend received from B Limited will be shown in CFS. So can I say dividend received, whether it was this dividend or this dividend, both will be deducted from what? Cost price of investment whenever received. Both will be deducted from the value of investment or carrying amount investment as per AS 23 I am saying. But in this also I am not happy with the answer. What they dividend declared on 30th April will not be recognized in CFS. This is not correct. Will be also deducted from what? Carrying amount of investment. This answer is also not correct. This answer is also not correct. Got this point? So this become overall AS 23. I hope you have understood AS 23. So this is completed. AS 23 is completed. In the next video will come with AS 27. Okay, till then bye bye. I hope you have understood.